Welcome back to the deep dive. We're going to be diving into investing today.
Oh, cool.
Yeah.
Sounds good.
Specifically this idea of like a good company versus a good stock.
Okay. Yeah.
Let's see if we can
Yeah.
kind of untangle this idea together.
Yeah, it's an important distinction for sure.
Yeah.
Because you can get caught up in the hype
Right.
of a company.
Exactly.
Yeah.
Like they have a fantastic product. Everyone's talking about it.
Yeah.
The CEO is like really charismatic and
Right.
leading the charge.
But
But does that make it a good investment?
automatically mean it's a good investment? No.
Right. And that's where I think things get
Right.
a little more complicated.
Yeah, definitely.
Yeah.
One of the articles you sent
Yeah.
uses a really interesting example.
Okay.
China Merchants Bank.
Okay.
They had amazing growth from like 2007 to 2017.
Yeah.
Their profits quadrupled. Assets like skyrocketed.
Oh, wow.
On paper, looks like an amazing investment.
Yeah, a dream.
Yeah, total dream.
Yeah.
But here's the catch.
Okay.
If you bought at the peak in 2007,
Oh.
you would have seen a decade of losses before breaking even.
That's pretty surprising.
Yeah.
So even though like fundamentally
Yeah.
the company was doing really well.
Right.
Um,
It just goes to show that a
yeah.
good company
yeah.
doesn't automatically mean
Doesn't equal a good stock.
a good return.
Yeah.
And this principle applies to more than just individual stocks, too.
Oh, really?
Like even entire markets.
Oh, okay.
Like think back to the dot-com bubble.
Oh, yeah. And
The 2000, or like the housing crash in 2007.
Yeah.
Like buying at the peak when everyone's like,
euphoria
yeah.
often leads to like
Yeah.
years of disappointment.
Yeah, like a lot of heartache.
Yeah, exactly.
So it sounds like whether you're
Yeah.
carefully picking stocks.
Or going broad with index funds,
Mhm.
that price you pay is
Really matters.
hugely important.
Yeah, hugely important.
But then that brings up the question of
Yeah.
how do we know if a stock is like
Right.
too high or a bargain?
We had as the $1,000,000 question. It's
Nope.
almost impossible to
Rough.
say like what the exact fair value is.
Okay.
So many factors
Yeah.
influence the price.
Yeah.
You know, market sentiment, investor psychology,
Oh, yeah.
even just speculation,
Yeah, people just guessing.
just plain guessing.
Oh, wow.
Yeah, take Xiaomi, for example.
Okay.
Their stock has been on like a roller coaster since
Right.
their IPO. It's been all over the place.
Interesting.
Yeah.
So even a company like Xiaomi
Yeah.
that everyone knows,
It's hard to say
yeah,
what a good deal is or not.
it sounds like we need some tools
Yeah.
or strategies to help us kind of
Yeah, for sure.
navigate this
Yeah.
uncertainty.
Absolutely. And one of the most powerful concepts
Okay.
comes from Warren Buffett.
Oh, Warren Buffett.
Yeah.
Now that's a name everyone knows.
Yeah.
What did he say about this?
He calls it the margin of safety.
Margin of safety. Okay.
Yeah.
How does that work?
It's a way to build in a cushion
Okay.
to protect yourself from the unknowns
Okay.
and potential errors
Yeah.
in judgment.
Because we all make mistakes.
We all make mistakes.
Yeah.
Instead of trying to perfectly predict the future,
Right.
you look for situations where the price is significantly lower
Okay.
than your estimated value.
Okay.
So like imagine a company you think is worth $10 a share.
Okay.
Applying a margin of safety might mean
Yeah.
only buying when the stock drops to $6 a share,
Okay. So you're
giving you that $4 buffer.
you're giving yourself like some
Yeah.
wiggle room.
Wiggle room, exactly.
Okay.
Yeah.
So it's like acknowledging that we can't predict the future perfectly,
Right.
but we can give
Yeah.
ourselves a little bit of a cushion
Yeah.
just in case.
Just in case.
It's like that old saying,
Yeah.
measure twice, cut once,
Yeah.
but for investments.
Yeah. I like that.
Yeah.
It's about being prudent
Yeah.
and recognizing that you could be wrong.
Totally.
Even if your initial valuation is a bit off,
Yeah.
that discount gives you room for error.
Okay. So that's interesting.
And this is where
Yeah.
that China Merchants Bank example.
Okay. Let's go back to them.
Yeah.
How does that play into their story?
Well, if investors had applied that margin of safety back in 2007,
Okay.
they might have recognized that
Yeah.
even though the company was doing well,
Yeah.
the stock price was reflecting incredibly optimistic expectations.
Right. Everyone thought it was going to
Everyone thought it was just going to
keep going up and up.
go up and up forever.
Yeah.
So by demanding a discount,
Oh.
they could have avoided buying at the peak.
Oh.
and potentially sidestepped those years of losses.
So the margin of safety isn't about just buying at a low price.
Right.
It's about buying at a price that makes sense.
Right.
Even if your initial assessment isn't perfect.
Yeah, it's like a
Safety net.
safety net.
Not for your investment decisions.
Exactly.
Yeah.
And the beauty of it is
Yeah.
this concept can be applied
Really?
beyond just investing.
Oh, wow.
Yeah, it's a way of thinking that can help you make
Okay.
more resilient decisions
Interesting.
in all areas of your life.
Yeah, that's interesting. We
Yeah.
started talking about picking stocks.
Yeah.
And now we're talking about
Yeah.
life decisions.
It all connects.
Tell me more about how this margin of safety thinking
Okay.
can apply outside of finance.
So, think about it this way. Whether you're choosing a career,
Oh, yeah.
starting a business,
Mm-hmm.
even planning a vacation,
Right.
there's always uncertainty.
That's so true. You can do all the research.
Right.
Make the best plans.
Yeah.
Life rarely goes according to plan.
Exactly.
Yeah.
That's where the margin of safety comes in.
Okay.
It's recognizing those unknowns,
Yeah.
building in some flexibility.
Oh, so it's like having a plan B.
Plan B,
Or like a
even a plan C.
plan C.
Yeah. Just in case things go sideways.
Right, just in case.
Yeah.
So if you're deciding on a career path,
Yeah.
maybe you focus on skills that are
Yeah.
useful in different industries.
Exactly.
Just in case that first
Yeah.
dream job doesn't work out.
Doesn't pan out.
Yeah. Or if you're starting a business,
Yeah.
secure a bit more
Yeah.
funding
Right.
than you think you'll need.
Yeah.
Just to give you a little
A little cushion.
cushion.
Yeah. If things take longer.
Yeah. Or it costs more.
It costs more.
Exactly.
Yeah.
Yeah, it's not about being pessimistic.
Right.
It's about being prepared
Yeah.
and recognizing that
Yeah.
unexpected challenges
They're going to happen.
are going to happen.
Yeah.
Sounds like this margin of safety
Yeah.
mindset can help us make
Yeah.
more resilient choices.
More resilient choices for sure.
Decisions that can weather those inevitable storms.
Storms. Yeah, exactly.
Like building a stronger
Mhm.
foundation
Yeah, for sure.
for our plans.
Yeah, and this brings us back to the investing world.
Okay.
That this is especially important
Okay.
for those who are picking stocks.
Okay, that makes sense because when you're
Yeah.
picking individual companies,
Right.
you're taking on
Yeah, you're taking on more risk.
more concentrated.
More concentrated risk, for sure.
Yeah.
Especially compared to like a broad index fund.
Right. So
Okay.
if you're going to play this stock picking game,
Yeah.
that margin of safety becomes even more critical.
Even more critical. Yeah.
And how much of a margin
Right.
are we talking here?
That's a good question.
The sources mentioned some
Yeah.
pretty significant discounts.
Some experts recommend a discount of 40%
Wow.
or even 50%
That seems like a lot.
to your estimated value before even considering buying.
Oh, wow.
It might seem extreme,
Yeah, it does.
but remember, you're trying to compensate for all those unknowns,
Right.
those potential errors.
And the market does
Yeah.
provide those opportunities sometimes.
The market often provides opportunities to buy at those kinds of discounts.
So it's about having the patience and discipline
Patience and the discipline, for sure.
to wait for those moments when
Right.
maybe the price has dropped
Yeah.
to a level that doesn't really
Doesn't accurately reflect
the true worth.
the true worth of the company.
Yeah, exactly.
Yeah.
Those are the times when a
Yeah.
true value investor can
Yeah.
really capitalize.
Yeah, like finding a hidden gem
Yeah,
that everyone else is overlooking
exactly.
because they're so focused on.
Yeah, or they're too caught up. The latest trends or...
In the latest trends or fads.
Yeah.
And that's what separates the successful investors
Right.
from the rest.
What is it?
The ability to think independently,
Okay.
resist the herd mentality.
Don't follow the crowd.
Don't follow the crowd.
Okay.
And wait patiently for those opportunities
Yeah.
when the price is undeniably right. It's like,
It takes a certain
yeah,
temperament to do that,
temperament for sure.
Yeah.
Like a willingness to
to go against the grain.
go against the
Yeah.
grain. Trust your own analysis.
Yeah. But it sounds like the potential rewards
Yeah.
can be pretty
The
big.
potential rewards can be huge.
Yeah.
And even if you're not a stock picker,
Right.
this margin of safety concept can provide valuable insights
Okay.
for navigating
Yeah.
all sorts of decisions in life.
Yeah. It's a reminder to be humble.
Yeah, be humble.
Recognize that we don't...
We don't have all the answers.
Oh, yeah.
And things can go wrong,
Yeah. Even with the best plans.
even with the best plans.
Exactly.
And that humility can actually lead to better decisions.
Yeah.
Not just in investing.
Right. In all aspects of life.
Yeah, it encourages us to
To think critically.
To challenge our assumptions.
Yeah, to always consider
Yeah.
the downsides.
Yeah, for sure.
Like having that
Like having that skepticism.
skepticism.
Well, yeah, that little voice in the back of your head saying, is
Yeah.
this really
Like, is this too good to be true?
too good to be true?
And when you combine that skepticism
Right.
with that margin of safety principle,
Yeah.
it can be really,
Can be really liberating.
like, freeing
Yeah.
because you don't have to chase the latest
You're not chasing trends.
trends or worry
You're
about
not worried about missing out.
missing out. Yeah.
They're making decisions
Yeah.
based on
Logic and reason.
logic and reason, exactly, not on hyper speculation.
Hyper speculation. And that gives you some peace of mind.
Exactly. Peace of mind knowing that you've taken those steps to protect yourself,
Right.
to minimize the damage
If things don't go right.
if things don't go as planned.
Yeah.
So as you go about your day,
Yeah.
your week,
Yeah.
your life,
Your life. Yeah.
think about where you can apply
Yeah.
this margin of safety.
Where can you build in a little
Yeah.
extra buffer?
Where can you build in that extra buffer?
Yeah.
It could be in your finances, like we talked about,
Yeah.
but it could also be in your relationship,
Right.
your health,
Your health. Yeah.
your career.
Yeah.
The possibilities are endless.
Really, it's about making choices
Yeah.
that are resilient.
That can withstand those ups and downs.
Yeah. Choices that can withstand the ups and downs of life.
It's a powerful concept.
Yeah.
And I think this deep dive has
Yeah.
given you a really
Yeah.
valuable framework
For thinking about all this.
for thinking about risk
Yeah.
and decision making
In a whole new light.
in a whole new light. Yeah.
So keep those sources coming,
Yes, please.
and we'll see you next time for another
For another deep dive.
insightful exploration.
Exactly.
Until then,
Yeah.
happy diving.
Happy diving.